Hello, everybody. This is Patrick MontesDeOca here with a live trading room sponsored by the Equity Management Academy. What I would like to do on this segment here is to review the report that was published in September the 3rd of this year, which basically indicated the yearly futures price momentum indicator trading instructions for 2016 to 2017. The cycle work that we do here indicates that as we came into the end of this year, September, October, November, December, the last quarter of this year, on September the 3rd, the gold market closed at 1325.90, and with the market closing above the 50-day moving average of 1218, was basically confirming that the long-term trend momentum is bullish. And what we're looking at, 1218, is basically the 50-day moving average that we use for long-term analysis. And as long as the market in gold, basis the futures contract in December, closes and stays above 1218, the trend momentum is bullish. But the work also tells you that if we do close below 1218, that it would negate this long-term trend to neutral. So this is our first pivot point that we use in the components of the algorithms that we use. The trend momentum is the moving average, and we use the 50-day moving average. Moving on to the price momentum indicator, this is basically the mean or the average price for the year. And what this tells us basically is that with the market closing above the yearly VC price momentum indicator of 1269, that the price momentum is also bullish. And at the same time, it tells you that if we do close for the year below 1269, that it would negate the long-term price momentum to neutral position. The price indicator tells you basically the extreme below the mean of 1269, what the probabilities are, what the if in fact it does close for the year below 1269. It tells you that it's possible we can come down to 1154 to 983, and then to go long on these levels. This basically would activate the extreme below the mean if we do get to these levels, with a big if we do get to these levels. This would activate the extreme 1 level below the mean. It's a very low probability that based on what we're looking at and based on what we're going to look at with regards to the cycles, how we are identifying the possibility that the market might be in a potential turning point. Let's go to the trading room here and take a look at the price basically of gold and what has transpired in the last couple of weeks. If we take a look at the daily chart, The high we made here was in July the 6th. If you're looking at the first time, July the 6th and July the 11th was approximately the time that the market made a high. And for it now, in retrospect, obviously it appears the market made a high in July for the year, and it has come down to exactly a 90-degree or 90-day cycle bottom. Okay, that is a 3-month correction that we have seen since July the 11th. And as you can see here, the price action seems to be validating and confirming that what we're looking at potentially is a 90-day cycle bottom, number one. The series of cycles that we manage as well, in taking a look at the yearly cycle, the 360-degree cycle, was indicating that we have the potential on October 15 to come in as a high, as a new high, preparing the market basically for the final correction that we should see in the remainder of 2016 for a potential bottom all the way down into December, as you saw happened last year. Okay? Using basically that level of 1045, which was the low in gold, on December the 3rd, it appears that the market has come down into a precise time and place where what, instead of a high on October 15th as expected from the yearly cycle, we have made what is called an inversion. An inversion means when the cycle is expected to make a high, instead what it did is it came down and made a low. This inversion increases the probability that the lows in the gold market probably will be made sooner than December 15th. Potentially, you're looking at the price levels making the lows. And this inversion now, what indicates to us is that instead of October 15 being a high, it has come in as an inverted low. And potentially aligning again the end of the year cycles that confirm a very strong probability that the lows are going to be made between October 15 and November 15th of this year. And this is how we, right or wrong, we are able to convert the price action into a signal that we can understand. Because if we have an expectation of a single going one way and it doesn't, that's called an inversion. And that in itself is an indication of a very strong signal that basically this cycle has inverted for whatever reason. In my opinion, it inverted based on manipulation that we have seen here recently from central banks. Given that to be the case or the reason, what it appears is the price action is embracing the cycle period that indicates the inversion to be a bottom, which is the signal that we produce from this interpretation, coinciding with a 90-day cycle, coinciding with a 360-day cycle, an inverted bottom a month between October 15th and November 15th is a very, very high probability that the bottom will be made for the year in the gold market. If you would like to receive any more information in terms of the work that we do, feel free to contact us. Reach out to us. I'll be more than glad to allow you to come in here into the live trading room that we use to execute real live trading signals. And if you qualify, I'll be more than glad to have you come in and join us for you to see how we execute this information that we publish on a daily, weekly, or monthly basis. Once again, this is Patrick MontesDeOca. I look forward to speaking with you soon. Until then, be safe, take care. Good trading.